As we discussed in the previous video, the income tax authority is picking up interest and is picking up steam when it comes to incomes which people would have earned via trading or purchasing and selling cryptocurrencies. So, the most important thing to note for this income tax notice is that this has been issued by the investigation department. Now, the investigation department issues notices only in case of two reasons. One, you have not filed your income tax return and they believe that you had incomes which have not been taxed. Or second, they have gotten information from another source which leads them to believe that there is some income that you have concealed or not offered to tax. Now, if we talk about what kind of sources could they have for obtaining this information, there could be plenty. They could have received information from a bank about any crypto trades that you may have done, which the bank is aware of. They may have received information from public platforms like local bitcoins where information about a person, his phone number, is readily available. And third, they may have received information from any internal basis, or they may have received information from also your social media. They are actually empowered to issue notices on those bases also. So it's very hard to pinpoint from where they're picking up that information. But in case you receive such a notice, it's very important to comply with the requirements of that notice. Go through the questions, answer them one by one, and honestly disclose all crypto incomes. The downside of not reporting or not complying with such an income tax notice is that the income tax officer can actually order a search in your premises to look for any income or any crypto asset which he feels you have and you have not disclosed, and if found can actually seize that crypto asset. So in order to avoid such an extreme step, it is in your best interest to proactively comply with income tax laws. And in case you do receive a notice, please take it seriously, reply to it diligently, and cooperate with the officer. Interesting question, and I wish I had a better answer. But income tax laws work in such a manner that they depend on your residential status in India. This means that in case you are an Indian resident, as per the income tax laws, your worldwide income gets taxed in India. This goes to mean that whether you have earned income in India, whether you've earned income in Estonia or anywhere outside in the world, if you are an Indian resident as per income tax laws, you will have to offer to tax your entire income from all countries to the Indian Income Tax Authority. Also, what is important to note here is that the Indian government has treaties with a lot of other governments whereby they can exchange information about different individuals interacting in different countries and actually get their hands on information about Indians who have been trading outside. So let's not stay under the assumption that crypto transactions or crypto assets held outside or traded outside are not traceable. There is a good chance that the Indian Income Tax Authority could get their hands on data or your transactions which have been conducted on offshore exchanges. I'd like to answer this question in two parts. First, when we talk about somebody having purchased crypto assets and not intending to sell them, then the question of tax does not arise. Tax is levied on profits and is levied on profits when they are realized. That means either you have sold your crypto asset or you have exchanged it for another crypto asset or any other goods or services of value. So until the time you actually liquidate or exchange your crypto asset for something else of value, the question of income or tax does not arise. The second part about capital gains. By definition, capital gains are applicable on the purchase and sale of a capital asset. Now, for crypto to get classified as a capital asset, the investor has to be purchasing crypto with the intention of holding it for a considerable period of time. The period of time may vary, it could be less than 3 years, it could be more than 3 years, and depending on the period of holding, do you get classified as long-term capital gains or short-term capital gains? I explained previously also that in case you are a trader, which means that you are conducting multiple trades and wanting to profit off the daily fluctuation or volatility, then you have to disclose your taxes as business income. But in case you want to invest or you intend to hodl and then sell after a considerable period of time, then you get classified as an investor and can file taxes under short-term capital gains or long-term capital gains. Thank you. It was wonderful talking to you. And I'd like to say that I am thrilled at seeing so many and such interesting questions coming in regarding taxation. It's always a pleasure to see the community bringing up questions and being more interested in trying to comply with the current laws. Just one more note I'd like to add that if you comply with taxes, it helps us to lobby against the government to explain to them that we want to be legitimate, we want to follow the laws, so it would be much better to regulate the crypto asset business than to ban it. Thank you very much.